Shares of Supermicro computer stock are up over 100% year to date in 2025. Of course, I'm happy about that because I rated this stock as a buy for 2025, and investors that followed that recommendation have more than doubled their money already, and the year is not over yet. So this has been one of the better recommendations on my list of stocks, including many others that I recommended this year that are performing really, really well. You remember Uber, I rated as the best stock to buy this year, and Uber is absolutely crushing it. So I'm happy to see these positive results, and hopefully they will continue. Now investors are asking me if they should buy Supermicro computer stock before the company announces earnings on August 5th. I'll answer that question in this video. I'll also preview what you should look for from Supermicro Computer in the upcoming quarter. What are the big factors to look out for? I'll share with you my proprietary discounted cash flow valuation model for Supermicro so you can see what I calculated as a fair value for this stock. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So let's start with a preview for what to look for from Supermicro in the upcoming quarter. Remember, Supermicro last updated investors on May 6th. And in that quarter, they informed us that some of their customers delayed making decisions in the quarter. Remember, this is when the time when President Donald Trump first initiated those tariff announcements and businesses were paralyzed. They didn't know what to do. They just waited, and decisions they would normally make during that time, they pushed out till later. They said, we just don't know. We don't want to cancel the order. We don't want to make the order. We just don't want to make a decision at all because we don't know how to calculate things right now, because one day there is tariffs, the next day they're paused, the next day they're increased, the next day they're canceled. We just can't make a decision with this kind of environment. We just don't have the numbers to calculate to decide how many we should order, when we want them, how we're going to price them. It just created a lot of pause in decision-making activity, not just what Supermicro is alluding to, but I saw this activity across the board. Many businesses chose to delay making decisions when there were more uncertainty surrounding tariffs. Thankfully, since then, we've had some more clarity surrounding tariffs. We've had some major deals with major trading partners, including the one announced just yesterday with the European Union, placing a 15% tariff on goods imported from Europe, including automobiles. So that's a big positive. Also, there was a deal with Japan, again, placing a 15% tariff on goods imported from Japan, including automobiles, which is a big sector for Japan. So that was also good news. The markets now can make some decisions because there is at least some clarity. One of the things that's coming out, one of the things that's becoming clear is that even if there is a supposed deal, the tariffs are going to be significantly higher than where they were before President Trump took office. So that's something that businesses now understand. They incorporate that in their decision making and they can move forward. Supermicro management saying that they expect many of those commitments to land in June and September, reinforcing my confidence in our ability to meet our long-term targets. However, economic uncertainty and tariff impacts may have a short-term impact on our business. I agree with the CEO here. Well, not so much agree, but I can say that since they reported these results and since they made these comments, the direction of tariffs has improved. We've gotten more certainty, we've gotten some actual numbers, and we've gotten more reductions in the actual tariff rates. So managers now can make decisions because they have information to make decisions, and the numbers, the actual tariffs, are lower than what were initially reported or initially announced in early April. And, a tariff of 15% or 20%, can be absorbed by many businesses, can be managed by many businesses. Uh, and it's not like, those that were threatened earlier, above 50%, approaching 100%, and there was back and forth escalation. And so things have calmed, and that's good news, and that's going to help Supermicro in the upcoming quarter. The company also said that as of March 31st, they had cash and equivalents of about 2.5 billion, and total bank and convertible notes were 2.5 billion. If you recall, this company had a major cash crunch starting last year, or I should say starting 2 years ago. And I explained why that wasn't the big deal, because Supermicro was increasing revenue by 100% or more for several quarters, and the company sells physical products. And when you're in that business, you're paying for your inventory up front, and then the people you're selling to, if they have more negotiating power than you do against your suppliers, which is true because Supermicro is selling to well-heeled buyers, bigger buyers, and the buyers against Supermicro have more negotiating power compared to Supermicro against its suppliers. And so there was a mismatch between when Supermicro was paying for its inventory and when Supermicro was collecting cash from its buyers. And so that created a cash crunch for the company. It reported several consecutive quarters of negative cash flow from operations. But again, that was due to spending money on inventory. And then instead of getting cash when they made sales, they got accounts receivable, which is not cash, but eventually turns into cash. And that's a circumstance of a business similar to Supermicro selling physical products and having accounts receivable on the other side. Not a major concern, but it just became more of a concern because Supermicro, during that same time, was experiencing a lot of question marks surrounding their financial statements, the accuracy of their financial statements, and the transparency of the management team with their accounting company. And so a normally benign situation of negative cash flow for a company that's growing revenue became a more serious issue because of those question marks surrounding their financial statements. And so thankfully those concerns have eased, and that's partly contributing to why Supermicro stock is up over 100% year to date in 2025. Of course, I kind of had an understanding of how these things work, and that's why I felt comfortable rating Supermicro as a buy for 2025. And I last updated that recommendation on May 23rd, reiterating my rating for this company as a buy because I understood, I've seen this before with other hardware companies when sales are exploding and the situation it creates with accounts receivable. And that's why it helps to have a professional guiding you through your investing journey so that you can understand some of the implications of these things and not panic when something comes up that is confusing or complicated and not something that non-professional. You just don't have enough time to go through all of these things because you probably have a full-time job and other things. You don't have the hours. I'm spending 6 days a week, 10, 11 hours a day evaluating financial statements. So I have the time to kind of evaluate these things. Whereas a non-professional investor, that's the whole point of a non-professional investor, is that it's not your job. You have another job, and this is something you can only allocate uh, a lot fewer hours to compared to how many hours I can allocate to this job because this is what I do 6 days a week. Okay, so now I wanted to share with you my proprietary discounted cash flow for Supermicro computer stock, which is up another 10% today. Another great day for this stock. The current market price is over $60 a share. My intrinsic value calculation for this business is $51. So the valuation is getting stretched now. Whereas early in the year, this stock was significantly undervalued. Now it's approaching overvaluation territory. Additionally, when I go to FinChat, or I should say Fiscal.ai, they were formerly known as FinChat, and they just had a rebranding, and that are now Fiscal.ai, my preferred data source right now. And when I go to them and look at the forward price to earnings, it's trading at a forward PE of 25, which is the highest it's been all year long and the highest it's been for a while. This stock, for many, many years, the previous decade, if we exclude the previous 2 years, this stock traded at a forward price to earnings in the high single digits or very low double digits, between like 8 to 12 forward PE, and it's now trading at a forward PE of 25. So elevated valuation, to be sure. So to answer the question, should you buy this stock before the company announces earnings? I would say no. In fact, I'm downgrading the rating for this stock today to a hold from a buy. I think it's a good time to take profits if you held some of these shares at those very low valuations. But I still like the company longer term. If you hold it for the next 5 years, I think you'll get reasonable performance as well. So I don't think it's a situation where I feel like you need to sell or you need to dump. It's just a situation where I don't think it's very attractive to buy heading into earnings. Of course, I'll evaluate the company's earnings results, share the details with you, and update my recommendation after the company announces these financial figures. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.